Yes, it is. What a fun time it is. It's tax time again, and we have a whole bunch of brand new things to think about. We've got the COVID things out there. We got the stimulus checks, and it seems like we need a quarterback. I say a financial quarterback. Jim Lineweaver joins us, and a lot to talk about. Tax planning is very important this year, right?
It really is, because I'm all for paying my fair share of taxes, but I don't want to pay any more than I have to. So when people look at their taxes this year, just because they didn't get a stimulus check doesn't mean they're not going to get stimulus credits. So very important, because you had two acts. One, you had the CARES Act in March of 2020, which gave basically any singles up to $1,200 and married filing jointly $2,400 in either a stimulus check or credit. And those were kind of phased out at income levels of $75,000 and married filing jointly at $150,000. But you also got dependent care for $500 per child if they were 16 and younger.
So people are getting these checks and they want, should I be paying taxes on this? Should I be writing this down? I mean, there's a lot of confusion there, right?
Well, there is, and also remember, they shouldn't be paying taxes on it, but if they didn't get a check, what happens is they can still get the credit, because there was also a relief bill passed in December of last year that gave another $600 for individuals, another $1,200 for married filing jointly, same basic phase-out rules, but then they also increased the dependent allowance of getting another $600 per dependent if they were age 17 or younger. So a lot of money out there. Make sure that you didn't get the check, talk to your tax person, and make sure you at least get the credits or make sure you're eligible for them.
Talk to your tax advisor. That's probably the most important information right now. And then we talk about minimum distributions. Where will we stand with that?
Yeah, they were suspended last year, so it helped a lot of people out, but they're back on the table this year. So if you look, there's a couple ways to combat that for those people that qualify for a required minimum distribution. One is to use qualified charitable distributions. That means don't take the check yourself, just take it right from your IRA or retirement plan directly to the charity, and you're not going to have to pay any taxes on that and still get that high standard deduction, which a lot of people take advantage of. And then you can also use donor advised funds. You can put money into that, tax deduct it that year, but also kind of create a legacy for yourself. I do that with my kids, is that we put the money in, we deduct it, and then in years to come, we pay it out to different charities. Great way to educate families about charitable giving.
So many different funds and times to do it. Is it too late to do some of this stuff?
Well, those two for last year, yes. Those had to be done by 12/31. But what you can still do this year is make contributions to things like your traditional IRA, Roth IRAs, health savings accounts, and simplified employee pension plans. So a lot of things you can do, but you just have to do it before you file your taxes this year for last year. And those people that get phased out of a Roth, because if you're at a married filing jointly, if you're over $208,000, remember, you're phased out of the Roth, but you might be able to do a backdoor Roth, which is making a non-deductible contribution to a traditional IRA and then transferring that over to the Roth. But there's some nuances with that. Make sure you talk to your professional before you do that.
See, Jim, that's what you tell us. I mean, I never knew about that. I mean, that's a great tip for somebody right there. They could save a lot of money. And talking about filing time, I remember last year, you filed April 15th. They changed it. It wasn't the same. What's the deal this year?
Yeah, they pushed it back to July last year, but unfortunately, we're going back to April 15th. So they did put the filing date to February 15th of when you could first start to file, so they gave a little extension there, but everything's got to be in by April 15th unless you're going to file an extension for your taxes this year.
And how do you file an extension if people want to do that?
Yeah, what ends up happening, just talk to your accountant, but all your money and the best estimate has to be paid still by April 15th, but the final documents really don't have to be done until later in the year. But just check with your accountant to make sure you don't miss those deadlines.
So if you're in a situation where you're doing your taxes right now and something doesn't look right, there's still some time you can make some adjustments to that form before you send it in.
You can, and if anybody has any questions, we have Mark Cyprus, the director of our tax services company. He'd be happy to help. If you're having troubles filing your federal, state, or tax, or city tax returns, we'd be happy to help on any way we can.
Well, there you have it, folks. If you need help reviewing your taxes for 2020, getting set up for success in 2021, or just want a second opinion on your current financial strategies, just give Jim a call. And, of course, don't miss him on Financial Quarterback, leading the Fox News with Chris Wallace. That's on Sunday mornings. Get a hold of the Financial Quarterback. He'll score for you. Thanks a lot, Jim.
Thank you, Dave.